What's up, y'all? What's up, Extreme Gains family? I'm Chuck, and this is Extreme Gains. I am not a financial advisor. Nothing I say is or ever will be financial advice. Please do not take it as such. Today is Sunday, Sunday, March 5th, 2023. This is my AMC, GME, and SPY weekly update and preparation video where I go over everything that I am personally looking at and looking for with all three tickers moving into this upcoming week. I do that by going over my snake algo method for all three tickers and some technical levels and technical setups. So with all of that said, let's dig in. How's everybody doing? I hope y'all are doing well. I hope you're enjoying your weekend. More importantly, I hope you had a great week in the market last week, and I hope you made some extreme gains for yourselves. All right, one quick announcement is I will be live here this Wednesday on the YouTube channel and on the Twitch channel. All day long, starting at 9 a.m. Eastern until market close for the Wednesday live stream. Don't forget about it. Come by, hang out with us, trade with us. Hope to see y'all then. Moving on to the charts. Currently on your screen is AMC and my current intra-week snakes. AMC finished the day on Friday, regular trading hours, up 7.87%, then up an additional 0.3% in after hours, ending the week trading at 660. The current set of intra-week snakes, red the day prior to, blue the day of the previous divergence from, and completion of fulfillment of the previous intra-week snake, have been fulfilling their projection now for 9 consecutive weeks. The difference between the two of them, as previously discussed in the previous update and prep videos, is the blue day of divergence was showing a higher top, and that is what ended up fulfilling. Red the day prior to was showing consolidation. We definitely diverted to the upside away from that consolidative projection. However, price action has now converged back with it for the end of last week, and you can see the continued fulfillment of it and what the projection would be from it. Then blue the day of with that higher top is what ended up fulfilling more accurately with that move to the upside. And then you see it there, and likewise, it continued to fulfill back downside as it was projecting all of last week. You can see the location of price action within it and what the projection would be from it if price action were to continue to fulfill it. Both of which are showing what appears to me to be a retest of that 680, a rejection off of it, and a move back to the downside. If that does not happen and price action does not fulfill to the downside, either from its current price location or off of the 680 rejection, then back downside like they are both projecting, then this upside move will have been deemed as a divergence from both of these intra-week snakes, and I would then have to clip a new set of intra-week snakes, which I have already done and have already been tracking with my premium and general Discord members. And this is what they look like. Orange is the day of divergence. And since its initial placement, it has continued to fulfill almost candle for candle throughout. You can see the location of price action within it and what the upcoming projection would be from it. Then red is the day prior to that divergence, and since its initial placement, it likewise has continued to fulfill its projection candle for candle. You can see the location of price action within it and what the upcoming projection would be from it if price action were to continue to fulfill it. Here's the difference between the two of them moving forward and how I will be looking at that. If price action does not continue to fulfill the 9-week consecutive fulfilling snakes to the downside, these will then be my new potential intra-week snakes for AMC moving forward. From a technical perspective, on AMC, I think it's pretty obvious. It's looking, or at least starting to look like a head and shoulders. Pretty symmetrical with that build out as well. If that's to be the case, and it is to come up here to that 680-ish level for this head and shoulders, reject back downside, come back down to that neckline, and then get the neckline breach to downside, therefore fulfilling that macro structure. The levels that I will be looking at to the downside will be either from its current position or from the rejection off of 680 back downside. The first intraday level will be 645, followed by 620, followed by the neckline at 595. A breach of that neckline at 595, I'll be looking for it to come back down to the macro the macro descending level of resistance from that macro descending wedge that we've been in for that retest. And I'll be looking for a retest level of support on that level of, or previous level of resistance at around 545. Then back upside, if the head and shoulders were to invalidate and this were to be a compressed compact W with a continuation to upside and it breached that 680 neckline, I'll be looking for it to consolidate to some extent here between $6.80 and $7. Then I'll be looking for a compressed compact W right here as part of that consolidation for a continuation to upside move after that. If it were to give me all of that after that $7 internal macro third realization, the next level to the upside that I'll be looking at will be a retest of this previous top at 735, followed by a retest of this top at 865. And that is everything that I am looking at with AMC. Up next is GME. GME finished the day on Friday, regular trading hours, up 2.8%, and then up an additional 0.27% in after hours, ending the week trading at 1875. The current, or I guess I should say the previous intra-week snake, as discussed in last week's weekly update and prep video, was showing that double bottom and then a move back upside, and it failed to continue to fulfill that, therefore diverting from it, requiring me to clip a new set of intra-week snakes, which I have done and have been tracking, and they have been fulfilling, and I've been tracking those with my premium and general Discord members for all of last week. Here are the set of 3 potential new intra-week snakes. Blue is the day of that divergence. Orange is either or. Red is the day prior to that divergence. Here is blue, the either or overlapped. Since its initial placement, you can see the continued dead-on fulfillment of it and what the upcoming projection would be from it if price action were to continue to fulfill it. Then the either or. Likewise, since its original and initial placement, you can see the continued fulfillment of it and what the upcoming projection would be from it if price action were to continue to fulfill it. Then red, the day prior to, same thing, has been continuing to fulfill since its initial placement. You can see the location of price action within it and what the upcoming projection would be from it if price action were to continue to fulfill it. Here's all 3 of them on there to give you a look at their similarities and differences. Obviously, if price action does not continue to fulfill to the upside to this potential internal third in the immediate, like the blue day of is showing and projecting, then this will be invalidated, and I'll be using the orange and the red. Orange will be the day of, red will be the day prior to. That is the only differentiating point between the 3 of them at the moment. And then obviously, if this were to happen, they are both essentially projecting the same thing until this diverting point between the 2 of them once price action gets out here. So that is how I am viewing and tracking those intra-week snakes on GME moving forward into this week. The technical setup and levels on GME. This was a previous macro third hit and box top build out here with a neckline breach to downside, compressed compact W back up in to that build out, and then another neckline breach to downside. I was looking for a possible macro compressed compact W here. That's what the previous intra-week snake was showing, and for that to happen, it had to maintain that previous smaller macro double bottom support, and it failed to do so. It breached that build out support and it beelined to this macro reverse third underneath it where I had projected that bottom to potentially be, and since then it has put in a V-shaped recovery back up to that build out support. So if this is going to have a chance back to the upside, it needs to breach that level of support and get back above it and continue consolidating for a continuation to upside from there, therefore fulfilling an inverted head and shoulders on this side and a double bottom on this side of this macro double bottom here. If that were to happen, the significant levels that I will be looking at to the upside will be that previous build support at $19, followed by $19.60, followed by this internal macro third at around $20 even, and then $20.35 above that. However, back downside, if this were to reject off of the $19 level, and this were to start consolidating down here, creating a new build level down here, just like it tried to do up here, then the levels that I will be looking at will be obviously that $19 rejection after the initial upside, or a release from its current position downside. I'll be looking for it to retest this support level off of that reverse third level at 1760. If it were to breach that, the next level down I'm looking at is the confluence of support here between the previous significant level of support at $17 and the ascending level of support, all of which right here at that $17 level. A breach of $17, God forbid, the next level down will be $15.70. And that is everything that I am looking at with GME. Last but not least is SPY. SPY finished the day on Friday, regular trading hours, up 1.6%, then up an additional 0.13% in after hours, ending the week trading at 404.73. The current set of intra-week snakes that I have been tracking are on the screen. Blue is the day of the previous divergence only. Red is the day prior to that previous divergence only, and orange is either or. Here is what all three of them look like. Blue, the day of that previous divergence from the previous intra-week snake, was right here. Since its initial placement, it started fulfilling essentially candle for candle, got a small fractal mirroring that happened internally here, and at the end of last week, this was about to be invalidated, and it was requiring price action to go heavy upside for a convergence back with it for continued fulfillment of it, and that's exactly what happened here on Thursday and Friday. You can see that convergence back with it for the continued fulfillment, and what the upcoming projection would be from it if price action were to continue to fulfill it. Then orange, the either or, has continued to fulfill its projection since its initial placement, damn near candle for candle. You can see that fulfillment there, the location of price action within it, and what the upcoming projection would be from it if price action were to continue to fulfill it. And then red the day prior to, likewise, continued to fulfill its projection since its initial placement. Now, the difference with this red day prior to is it is still valid in both its straight up and mirrored positions. This here is the mirrored position. You can see the dead on almost candle for candle fulfillment throughout since its initial placement, the location of price action within it, and what the upcoming projection would be from it if price action were to continue to fulfill it. And then likewise, like I just said, its straight up position has continued to fulfill as well, a little more extended horizontally, but nonetheless, you can see the damn near candle for candle fulfillment of it since its initial placement, where that would put it, and what the upcoming projection would be from it if price action were to continue to fulfill it. Here are all three of them, so you can see the similarities and the differences between them moving forward. Red in its straight up versus red day prior to, which is essentially showing the same thing as the orange in its mirrored. So I'll keep viewing the day prior to, the red one here, in its straight up position because it differentiates between the orange and should give definitive direction and hopefully accurate projection moving forward once price action decides which one it is going to continue to fulfill. Then, from a technical perspective on SPY, I think it's pretty cut and dry here. I've talked about this repeatedly. Those of you that have been with me for any period of time know this. I look at the market as if it is all M's, W's, with legs up and legs down, connecting those M's and W's. That is the market as a whole. The previous box top build out on that macro third M formation, neckline breach to downside. We came right back down to the macro reverse third and the convergence of that and the macro ascending level of support at around that 392 level that I had previously talked about. We have put in a double bottom down here on that reverse third, back upside, and Friday we just breached that upper macro neckline for this W fulfillment. The lower neckline was breached on Thursday, late Thursday, early Friday morning, and then Friday we went ahead and got up there and breached that upper neckline. Now, I have two potential 4-hour third levels in here. If this lower one that I have in here were to be valid, I am expecting an interaction with it to some extent. At a minimum, I'm expecting another little double top part of consolidation followed by a compressed compact W if it is to continue to the upside. And if it were to do that, the levels that I will be looking at will be obviously the realization of that 405 level followed by a breach of it to the upside. The next level up I'll be looking at will be 408.30 followed by 411 followed by 417. However, if the realization of that 405 level were to cause this to break back down and validate this as the third, then I would be looking at the same thing, the 405 consolidation to some extent, and then a neckline breach to downside. That neckline would be the shared neckline here at 403 off of the 405 rejection. 403 would be the next level down, followed by 399.50, followed by 392. My friends, my family, that is everything that I have that I am personally looking at with all three tickers from all aspects with intro, week snake, and technical levels and technical setups. And that is everything I have for this video. If you made it to the end of the video, thank you all very much. Greatly appreciate it. Good luck in the markets this week. If you do not show up to the live stream, I hope you all do well. Don't forget, live stream on Wednesday. Come by for that. I hope to see you all then. Enjoy the rest of your Sunday fun day. And I will talk to those of you that show up on Wednesday at the live stream. Take care, y'all.